Hey, welcome to the YouTube channel. For those of you who don't know who I am, my name is Josh. I hope you guys are all having a terrific day. Let's talk about risk management and money management. Let's get started. All right, so there's a lot of different factors that go into risk management, money management. There's a lot of different rules: 1%, 2% stop losses, 1 to 3 ratios, 1 to 2, 1 to 1s, 1 to 5, 1 to 10s, and so forth and so on. And so you got to figure out what kind of trader you are. And it really comes down to is if you're under the PDT rule, then you need to be a trader that's looking at capturing quite a big, capturing a large move because we invest smaller amounts of money. So using larger time frames are best for you. Oh, before we move on, we go live every single day in a virtual trading chat room. All you need to do is click the first link in the description box below. That takes you to our free Discord server. That's where we post the live link. I really want to work with you. I want to answer your questions, and I want to get to know you and what kind of trader you are. So be sure to click in the first link in the description box below. And we're looking at the daily chart on PTON. I alerted this stock in our chat room a couple of days ago, and we liked this big push up, this big exhaustion bar. And I was a buyer down at the 50% retracement level. I play a lot off the 50% retracement. I do like the 618 and the 32 point or 38.2, but I would play a lot off the 50%. So when a stock comes down into 50% and it's got this huge nice move, maybe it has some news behind it, I'm generally a buyer. So we bought the dip on Peloton. I was risking the lows all the way down here. So I didn't care if it recaptured underneath the 50%, went bantered back and forth a little bit, maybe recaptured the 50% on the bullish side, and then continued up. I was giving this stock plenty of room. Matter of fact, it was like a 5% loser in this particular stock. Okay, so now I'm not saying I'm risking 5% of my entire account value because I'm not investing my entire account into Peloton. I just know that I believe I was risking $7 or so in the trade. So if my fill was roughly right around 11.50 to $12, I was risking about $6. Okay, and so if I'm risking $6, yeah, at 100 shares, I'd be risking $600. Okay, and if I wanted to not risk 600 and I only wanted to risk $6, well, then I would just buy one share, right? And if you're wanting to risk $60 and you'd buy 10 shares. The point is we want to know what we're willing to lose in the trade way before we're willing to know what we want to risk in the or what we were wanting to make in the trade. What I'm saying is we want to make sure that we do have a good reward. We don't want to be risking, obviously, be okay risking $30 and we're only going to make $10 in the trade. We want to make sure that we do have a good risk to reward ratio. So my reward would be all the way up to the gap fill. Right, this is where we had the big gap down in the stock. So the gap fill would be right here. So up about $14 from where our fill was at the 50% retracement. So we're risking $6 to make $14, roughly a little bit over a 1 to 2 ratio. So that made it worth it to me. And so what I want to do is I want to talk about is not you'll hear 1% stop loss, this and that. The point is we need to learn how to read the technicals first and foremost. We need to buy low and do what they always say, sell high. So we want to learn where support's at in the market using, like I said, the 50% or the tops and bottoms of our power candles. And then we could learn to manage the trade. So if we are currently in Peloton and we have our stop loss, and the old stop loss was clear down here, right at the low of the power candle at 105. Now, since the stock held support and it held at the 50% where we were dip buyers down there, it makes sense to move our stop loss up to the 110 mark, because this, if we know how to read the technicals and if we start failing under this 50%, then we know on this power candle right here, if we start failing under the 50%, so if we start getting candle rejections that look something like this, and let's say we close right here and then we get another bar down tomorrow and then it starts breaking the low, this means this pattern right here that it's putting in currently is failing. So all the buyers at the top of that pattern, all the buyers at the 50% are most likely to hit their trigger or trigger their stop losses, and that's going to cause more selling because they have to sell their positions, and selling causes the market to go down. So then we would currently get more of a sell-off. Now, why it's important to move our stop loss up is because we want to protect ourselves. So we went ahead and bought the dip at 112 on PTON, and now since the stock is continuing to prove itself to us in the upward position, so we are making money, everything's looking good. We need to protect ourselves. So we want to minimize our loser. And if we get stopped out, maybe we're still losing a little bit of money, but we're not losing near as much as what we would have been clear at the bottom. If, for example, it continues higher, and we hope it does, right? We hope that this candle closes, let's say here at the high or something of the power candle. If that's the case, especially if we get a gap up in the morning, let's say we get a gap up in the morning and we get a sell-off, we get buyers at the top of the, which this happens quite a bit. So, and this is what's important to learn the technicals. We would get a sell off on the daily candle, on the daily chart, down onto the power candle's low, or excuse me, the power candle's high, and then we find more buyers, and then now the stock starts moving up. And when it does this, now our target is at the gap fill. And if we get another close right here, then tomorrow, or let's say Friday, what we want to do is we want to move our stop loss up. Okay, so instead of having our stop loss here, it was here, now it's here. What we want to do is we want to move it underneath the new power candle. We want to move it underneath the new candle's low, and that way we're at least mitigating our losses, or now we're keeping some profit into the trade. And this stock could continue to move up and hit our profit target, we take profit, or we could continue to move our stop loss up. So let's say the stock does something like this and it puts in another candle. Let's say we move our stop loss right here and it puts in another green candle, but it's not a very big green candle. It's smaller. So maybe it moves up a little bit like this. We get some selling down here at the 50% retracement, which would make sense. And it closes right here. Well, now we just, once again, we move our stop loss up to the bottom of the candle, right there. As long as the close is over the prior day's high, we continue to move our stop loss up. And if the stock continues, we can move our profit target up too. So that way we're getting as much out of the trade as we can. And if this stock wants to continue and it continues to go, we could just continue to move our stop losses up under every single candle. Okay, that breaks the high of the prior candle. And so we continue to manage our trade that way. That way it's important. Now, we mentioned something in the chat room on taking some profit off the table, which is also very, very important. And it makes sense. So if we are currently getting to our original profit target, which would be right around this 125 area, then wouldn't it make some sense? What if we sell like half of our position? So if we own 20 shares, 5 shares, 100 shares, we would sell 50 or 2 shares or 3 shares, depending on how much you're in the stock. And that way you're at least taking some profit off the table. So if you're up 50 bucks and you take half off, you will have made $25 on the trade at least. And if this trade starts coming against you and it triggers you one of your stop losses as you continue to move the price of the stock up, then you're at least managing your trade. It's not going all the way back and stopping you out at a low way down here. Remember, this was our original stop loss. You're not going to lose a bunch of money in the trade. You're not going to break even on the trade. We want to protect profits. We want to continue to have growth in our account. We don't want to risk so much that we continue to have these losers, okay? So I hope this video was useful. If we have earned your thumbs up, please smash the like button. Don't forget to subscribe to the YouTube channel so you can be updated every single time we upload new content. And in the first link in the description box below is our free Discord server. This is where we have a virtual trading chat room. We go live every single day to answer your guys' questions. If you have any questions, go ahead and also leave them in the comment box below. Other than that, I'll see you in the next video.